Hi, I am Anna. I come from www.ntvforex.com. Sentiment slips after worrying read through on Chinese retail sales video. http ntvforex.com news ID F0806B 7/16/2020 11:07:46 am. Market overview. A slight tempering of the recent surge in risk appetite has taken hold today. Positive news flow in recent days over the progress of COVID-19 vaccines, one from U.S. pharma company Moderna, and one out of Oxford University, show that vaccines are in the pipeline. If this turns out to be the case, this will be the one true way that risk appetite can sustainably recover. However, economic data out of China overnight suggests that in the meantime, economic recovery may be wobbly. Whilst GDP for Q2 came in ahead of expectations at 3.2%, versus expectations of 2.5%, there was concerning data regarding consumers in China. Retail sales showed a disappointing 1.8% decline in June, a point at which China was fully out of lockdown. The consumer may still only account for around half the Chinese economy, and industrial production grew as expected. However, it is the read-through to other, more consumer-driven economies, which is the concern. The US is struggling to get its economy out of lockdown as infection rates are at record levels. This does not bode well for consumer confidence and retail sales in the coming months. June's today's data will show a strong rebound in June, but concerns are for the months in Q3, which will be impacted by the second wave of infections, if the first wave ever really finished. We have a major central bank today on the docket, but the ECB is likely to be very much in wait-and-see mode, with the extended easing measures undertaken in June. Wall Street closed solidly higher last night, with the S&P 500 0.9% at 3,226. However, with US futures ticking lower this morning, E-mini S&P's 0.5%, there is a mildly corrective feel to equities today. Asian markets have taken the data out of China quite negatively, with the Nikkei 0.8% and more considerably the Shanghai Composite 4.4%. In Europe there is a risk-negative bias, with FTSE futures 0.6% and DAX futures 0.8%. In Forex, there is a risk-negative and dollar-positive skew. This is meaning slips back on AUD and NZD, whilst GBP is also weaker. In commodities, the dollar rebound is weighing on gold 0.3% and silver 1.0%, whilst oil is slightly lower after a move by OPEC to taper its production cuts in the coming months. The ECB rates decision and US retail sales dominate the economic calendar today. The ECB monetary policy decision is at 12:45 BST and is expected to be a muted affair. No change is expected to the main refinancing rate of 0 or the deposit rate of 0.50%. There are also no changes expected to the Pandemic Emergency Purchases Program (PEP) after it was extended in June. The press conference by ECB President Lagarde is at 13:30 BST and is expected to show the Governing Council very much in wait-and-see mode. The US retail sales data for June is at 13:30 BST and is expected to show Core ex-autos retail sales grew by 5.0% in the month of June after a rebound of 12.4% in May. The Philly Fed Business Index at 13:30 BST is expected to slip back slightly to 20.0 in July from 27.5 in June. Weekly jobless claims are at 13:30 BST and are expected to show claims of another 1.25 m last week after 1.31 m in the previous week. Chart of the day. NZD/USD. The risk currencies have been ranging for the past month, but are they preparing for another breakout? Looking at the chart of the Kiwi, we see NZD/USD once more swinging higher within the $0.6370 $0.6600 trading band. Using the support of a pivot around $0.6500 as support, the bulls are getting ready. Since the recovery began in mid-March, the Kiwi has already been through one multi-week phase of ranging, only to break to the upside. Holding on to the support at $0.6500 is growing in importance for the next upside break to be seen in the coming sessions. However, despite the positive medium-term configuration on momentum indicators, there is still a slightly more cautious look to near-term signals, which could question the conviction of a breakout. The MACD lines need to cross higher, whilst stochastics need to hold above 80 and RSI needs to push into the high 60s, preferably above 70, to really suggest conviction. Subsequently, with the market slightly struggling still around $0.6586 $0.6600, we are minded to wait for a closing break above $0.6600. This would then imply a 230 pip upside projection target and at least a test of the December high of $0.6755. A failure back under $0.6500 would simply continue the month-long range. Brent crude oil. For the first time in 2 weeks, Brent crude has managed to pull 2 decisive positive candles in a row. The latest strong close, with a gain of 2.0% on the day, has put Brent crude within tantalizing grasp of the key June rebound high of $43.95. This is a resistance that has lasted for more than 3 weeks and which protects the key gap resistance at $45.20. During the past 3 weeks, the price has consolidated, breaking another uptrend. However, buying into weakness has continued to leave a succession of higher lows. With the last couple of sessions suggesting the bulls are gaining in confidence, we see stochastics now at a 1-month high. A close above $43.95 would be a positive signal, but the bulls would really be encouraged by a close above $45.20. Aside from minor resistance at $48.40, there is little real resistance then until $53.10, $53.90. Support at $41.30 is growing in importance, but the key support is the higher low at $39.50. Dow Jones Industrial Average. The Dow jumped higher last night to finally fill the gap of the early June island reversal at 26,940. It was interesting to see that the bulls could not quite close the gap as the market closed at 26,870 yesterday, but the bulls will certainly be looking to rectify this today. Momentum indicators are now gradually turning more positive as the market has pulled higher in recent sessions. With RSI above 60 and confirming a 1-month high, along with strong positive configuration on stochastics, the bull cross on MACD lines is also encouraging. The bulls will now be looking to use weakness into the 26,300–26,610 near-term breakout support band as a chance to buy. The bulls would only lose their control of the outlook on a move below 25,525 higher low now. Near-term weakness will now be seen as an opportunity to buy. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching.